Hi, many people think that if I am going to start investing, first I need a lot of money. First I will earn a good money. First I will make a good money. Then I will start investing. But you are totally thinking wrong. Just $100 per month for the next 10 years, for the next 1 year to 10 years to 5 years to 10 years can change your future. But this is not a short term, this is long term. Investing means long term, not a short term, but this is can change your future.
What if I told you skipping just one food delivery a week could make you richer in the next 10 years? Most people think investing is only for rich people. That's exactly why they stay broke. Let's keep this simple. If you invest just $100 every month, you're not only saving money, you're buying future freedom. After 1 year, your money starts building habits. After 3 years, your investments begin growing faster. After 5 years, compounding starts working quietly in the background. After 8 years, your money can grow bigger than you expect. After 10 years, small monthly investing can turn into serious wealth. And here's the truth most people never realize. It's not about investing huge money. It's about starting early and staying consistent. Rich people don't wait to feel ready. They let time grow their money. Even simple investments like index funds or ETFs can slowly build wealth while you sleep. The biggest mistake, waiting too long to start. Because every year you delay investing, your future self loses valuable time. So ask yourself, will you keep spending money to impress people today? Or start investing to create freedom tomorrow? Start small, stay consistent, and let compound interest change your future. Most people quit investing in the first year. Not because they lose money, but because they expect to get rich too fast. But year one is not about becoming rich. Year one is about building the habit that can make you rich later. Let's break this down. Monthly investment, $100. That means you invest a small amount every single month consistently. By the end of the year, your total invested money becomes around $1,200. Now, where can this money go? One option is an S&P 500 index fund. That's basically investing in America's biggest companies like Apple, Microsoft, Amazon, and more. It's considered more stable for long-term growth. Another option is Bitcoin or tech ETFs. These have higher growth potential, but they also come with higher risk and bigger ups and downs. The average long-term return for many investors is around 8% to 12% yearly. That means your $1,200 could grow to around $1,260 to $1,350 in the first year. Now listen carefully. The profit in year one may look small, maybe only $60 to $150, but that's not the real goal. The real goal is discipline. Because if you can invest every month without skipping, you are training yourself to think long-term while most people chase quick money. That's why the first year is all about habit, consistency, patience. Small investments today can become massive wealth in the future through compound growth. Your future self is watching the decisions you make today. Here's where investing starts getting exciting. Most people never reach year 5 because they quit too early. But the people who stay consistent, this is where they begin to see real wealth building. Let's break it down. You continue investing $100 every month. After 5 years, you've personally invested around $6,000. Now here's the important part. Your money is no longer growing only from your deposits. Now your returns are also creating more returns. That's the power of compounding. For investments, many people choose an S&P 500 index fund for steady long-term growth. And some also invest in future-focused sectors like AI and robotics ETFs. Why? Because technologies like artificial intelligence, automation, and robotics could shape the future economy. Historically, long-term investors may average around 10% to 15% yearly returns over time. That means your total investment could grow from $6,000 to around $7,800 to even $9,000. And now your profit becomes much bigger, around $1,800 to $3,000. Notice something? The first few years felt slow, but now the growth is speeding up. That's exactly how compounding works. At this stage, most beginners panic during market crashes and stop investing. But smart investors understand something important. Market crashes are temporary. Consistency is permanent. That's why the best strategy is simple. Keep investing every month, even when the market feels scary. Because long-term investing is not about emotions. It's about patience, discipline, and time. 5 years of consistency may look small today, but it can completely change your financial future tomorrow. Now we've reached year 10. This is the stage where most people finally understand the true power of investing. Not because of luck, not because of gambling, but because of consistency over time. Let's look at the numbers. You invest $100 every month for 10 years. That means you personally put in around $12,000 total. Now here's where compounding changes everything. Instead of staying at $12,000, your investments could grow to around $22,000, even $28,000 over time. That means your profit alone could become around $10,000 to $16,000. Think about that for a second. Your money started making money, and then that money started making even more money. That's why long-term investors focus on time, not quick wins. Many investors keep a strong foundation in the S&P 500 index fund for stable growth. Some also add higher growth investments like Bitcoin or AI ETFs for future potential. Yes, these investments can be volatile. Prices go up and down. But over long periods, patient investors often benefit the most. And here's the biggest lesson. The person who invested small amounts consistently for 10 years usually beats the person who keeps waiting for the perfect time to start. Because wealth is rarely built overnight. It's built month by month, year by year, decision by decision. That's why consistency is more powerful than motivation. Small steps today can create massive freedom tomorrow. So if you're waiting to start investing someday, maybe someday should be today. So remember this. You don't need to be rich to start investing. You need to start investing to slowly become rich. The biggest flex in the future won't be expensive clothes or luxury cars. It'll be financial freedom. The freedom to choose how you live your life. Start small, stay consistent, and let time do the heavy lifting. Your future self will either thank you or regret that you waited too long. The choice starts today.